G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please sure check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So, today's video, looking at meme coin today called Ski. Okay, biggest holding. Well, it was biggest holding. It's not no longer the biggest holding. The market has shown its hand, and it's dropped a fair bit recently, and that's why it's not my biggest holding. Not because I reduced my exposure to it, but it's the fact of the matter is it's declining against the other coins that I hold. It's been greater, so that is the reason why. Okay, so we're in the sort of price action here, and we're on Dex Screener looking at the price, and I just want to show you some of the patterns it's done previously, whether it's going to follow this pattern or not going forward. Alright, so if you have a look here, this is a logarithmic chart, and the market cap is displayed on the side here, and you can see this back in April last year it launched, and obviously it made a massive move up high in the green candle, and it obviously went down, quite a steep drop. And we got down to this low here in September, but the whole time it was going down like this. Went up, down, in this channel, this descending parallel channel. Broke out of it, and then boom, we had this massive move here at the end of last year. Alright, and got the SMI down here showing that when it crossed bearish here. Okay, where's the vertical line? Over here. This is on the weekly time frame. It crossed bearish, and then boom, it happened again and went into this channel. Yeah, so you can see this channel quite clearly here. It consistently bounced off and on. The bottom and the top of the channel, and it broke out and had a move up in May 2025 this year, and another move down. Okay, a move up. All right, then we formed another channel starting in July. Then went down, up, down, and we wicked. So then we broke above it. It was a fake out wick, then went down. Sort of not really up much here, it's just really just dropping, then massive candles here. So they're getting some really aggressive downward price action, and it looks to be breaking below this channel, so it's really dropping hard. Will this be a wick like this and then just wick and go higher? I think we're going to turn around pretty soon. Okay, so it's just following what these two did, but this parallel channel, as you can see here, it's not as steep, right, as these ones are very steep. They're pretty much the same, like a 45-degree angle. This one's more like a 30-degree angle. It's not as steep, okay? And, this is the SMI indicator. So very similar to, like you see, a MACD sort of pattern with the momentum down and up, right? We're negative, we're below zero, so not very good. The momentum, so you want to see momentum picks the upside, and then this oscillator turn around. So you had a cross here bullish, and there you go, a bit of a pump there, and a dump. It happened again here. Bullish cross, blue went above the orange, had a pump, alright. And then we had a bearish cross here, led to more downside. So the bearish cross here, around here, didn't get much more downside, and then pumped and went to this high, which was pretty much on the back of a bullish cross on the SMI, and then went down again. And you can see here, if I crow and draw this, it's obviously momentum so strong to the downside. Yeah, it's continued down for a long time. It hasn't crossed at all bullish all the way down. Same as this one here, all the way down. Didn't cross bullish until here. Had a pump, and go back to this one. There's no information, unfortunately. So we're getting a very, very interesting, whether we break it more downside or we actually do eventually get this nice weighted, massive explosive breakthrough with this downward sloping parallel channel, and then boom, make new all-time highs. That'd be great, but I don't see it happening until next year, so I won't get too excited just yet, but definitely a good time to accumulate. And this SMI is lowest ever been, so it's showing very, very bullishness. That's going to turn around very, very shortly. A nice relief pump, because it can't keep going down like this and just It's a long time frame it's been going down for. So if you really look at this high, right, back in April 2024, it's a low it made. It lasted 150 days, 147 days. All right, you do it again. This high, okay, December. It's a low it made. You can count the green candle, the red candle. It's up to you. I can count the green candle. 126 days. All right, it lasted. Now, this one, the high. I have to get rid of this thing here. Okay, the high is here. Righto, cool. Zoom out again. So the high was here, and it was. You don't really count this high. You count the high from the start of the channel, and we are on day 154. Right. So it's lasted longer than this one, first one, and obviously longer than this one. So we've been in this consolidation quite a long time now. Well, it could, start to break up. It's a question. What we need to find out is when it breaks up. When? Well, because on its own, there's nothing to really suggest that it can find relief until the big boys like Ethereum and Bitcoin can lead the way and prove that we have bottoms at the moment. So that's where we're at with this one. Is quite grim. Okay, now we'll go and look at Bitcoin real quickly. Bitcoin's here, and look at it. It's about to pump. It looks like it's following a green candle on the 3-day time frame. I'll fill this little wick here nicely from this purple candle to this green candle. This wick here got half filled right there. Okay, so we could hold above this 100-week moving average. It's very crucial, especially on the weekly time frame. You can see where it's wicked right to it perfectly. I want to hold this level. All right, go higher. That's the key. And boom, get these moving averages, break through them, and then go for your Mary, go for your liking. Run to the hills. But now look at the moment. It's interesting how it's sort of playing out. Testing this sort of moving averages back in April this year, March. It was at the 50-week. Even in August, September 2024, 50-week. And then you got this another 50-week here in 2023. Okay, this cycle so far. So that's what we've seen. And it's weaker, all right? There's no doubt about it. MACD's about to cross bullish, all right? Seen this, cross here, massive move upward. Okay. And back here, move upward, huge move upward. So the last two times it's done a very, very good job of indicating Bitcoin's next continued trend move. We have sort of broken trend. We've never broken this low though, so we're still in an uptrend if you want to count that low. But structurally here, if you count these little lows, highs and lows, we're definitely in a downtrend at that stage. Okay. The problem we got here, we are going lower, right? Price has been struggling, and this MACD is going lower. All right, it's not a problem. It's actually a good thing. We're seeing divergence playing out. Okay, so seeing this metric going down. All right, as you can see there, and this is actually going up. Believe it or not, it's making a higher low than it did here. Okay, and this one here, it's continued. It's the same. Okay, so there's no divergence there. It's just now got a hidden divergence playing out for Bitcoin, and that'll be good for ski mask dog. Once that crosses bullish, and it should send it up higher. Okay, and I see this cross bullish as well. Right, then you got Ethereum on the weekly time frame. Nice wick here. Then got to the bull market sport bands, and it didn't. I rejected, but we're getting this nice wick fill here, the weekly. Beautiful, and divergence. Well, there's no divergence playing out in the weekly time frame. See here and here, it's the same. High or low. If you go to the 3-day time frame, it's a bit different story. We're getting more of a hidden divergence playing out. So this MACD has gone lower than this point. All right, as you can see there. That's what you want to see. It's gone slightly lower. And price has gone higher. So that's divergence, all right? That's plain and simple as that. Hidden divergence. This is green dotted line here. This accounts from this point where it crossed here. to here, where it crossed to the cross here. So it counts from there to there, and that's hidden divergence as well. Right? So Ethereum looking quite good. Eventually, you should break up the upside. We are sort of struggling here below all the moving averages. All right. So a bit grim. It's a bit sort of hard to withstand. You know, this bearishness has been full on. Go to Bitcoin now. And one thing I need to have a look at is the risk metric. Okay, we're sitting at a very low reading of 14. Okay, so it's in the deep blue area, and you want to set it around these sort of moving averages. Yeah, so we're getting this maximum fear sort of coming out, and yeah, we should see some upside soon. A relief band at least. Okay, if we only continue this bearish price action, you want to see a continued move. Otherwise, you know, do something like that. We're in the bear market. But I don't want to see that. I want to see some follow through coming here. So you see a pump, a break, right, a nice strong move, and then something like that. I don't know. Even a higher and a stronger move. It's low, so it retests the moving averages, and then springs off it, and then goes higher. Because Bitcoin's at the stage where, you know, it might take a bit longer to consolidate. Okay, it's definitely just got here, so we can allow more time. All right, and you know, make your low like it did here, and it took 42 days to really get going here. It made its low, and we're only on day 27. All right, so 42 would put us here-ish, somewhere around there in January, so start next year. Okay, this one was a very long consolidation. This year was really that 2024. Just look at that, crazy, man. The up and down movements it did there. It was all choppy from March to September. Okay, so every time is a bit different. All right, they're all the same. They're all treated differently, and that is that one. So Bitcoin, ETH, and Ski. Okay, Ski Mask Dog. What happens there is up to Bitcoin and Ethereum. All right, so it's anyone's guess where the price is going to head. You know, we sort of know what's going to happen with the monetary policy. Looks pretty bullish. You got the government getting out checks to its holders, and then he's going to do that for next year for the citizens. So that's all coming. Stimulus, and more stimulus. But the labour market looks quite weak at the moment. So not much job growth. Almost seeing zero jobs added to the economy, according to Fed Governor Waller, I think his name is. He was saying that there's not much job growth at all, near zero. So we're seeing a slowdown in the labour market, 4.6% unemployment rate. It's looking pretty interesting. Not a good thing. You want to see it slowing down again, like sort of tapering off and heading back down, as with the Fed coming in and saving the day or easing. And they aggressively ease, not just softly ease. They aggressively ease because this is a time where if you leave it too late, it'll take off. Because unemployment rate could just go parabolic. So that's that one. And this is Ski. Tracking this one quite closely. It depends on the macro. It depends on Bitcoin, Ethereum. It depends on the stock market. It depends on all the other factors. Because these are the riskiest assets. These meme coins are the riskiest ones. At 9.7 million market cap. Very, very risky. Okay, and I don't know where the support level is. It's pretty much broken all that support, and there's this big candle here, green candle. Support's down here at 1.5 million. All right, so that's your next support level. Well, up here, if you want to count that one, that goes through the twice action, but somewhere there at 4.44 million. There's your high. There's your touch, and touch. So we could come back down to here, which is quite an aggressive move down and brutal, but for the holders, it's either make or break, because you don't be going down to here, all the way down here is next, or here first, 1.7, and then down here, 464,000 market cap. So it's not looking good, but you got to hold strong, you got to have conviction, you got to understand what the macro does, and if you're in a bear market, so be it. You come back in 2027, another year gone. But yeah, to wait and see what the conditions happen with the Federal Reserve pivoting their stance, monetary policy, and balance sheet, entering pretty much QE, okay, quantitative easing, to front run a recession that they don't want to happen. So they're trying to get that avoided. Hopefully they pull it off. That's the hope. If they don't pull it off, we're all screwed. And our meme coins are going down another further, whatever, 50, 60, 70% drop from here. So let's hope it doesn't happen. I'm optimistic. I'm seeing this one break out. It's a downward sloping parallel channel, and we should see some upside. So, yeah, that is the video. So I hope you enjoyed this one. It's a little bit different. It's not the best quality, I think. I was using my phone as an audio source, and the camera from the MacBook. It's pretty slapped together for the video. But yeah, hope you enjoyed it. Just quick and easy. Going over ski. One of my favourite ones of the cycle. This meme coin's pretty. Well, it's got a good following. It's got a massive community. Pretty engaging. Hopefully, they're holding still strong, because I am, and I'm buying more and more and more as it drops. And there's no flaw to this thing. It just keeps on dropping. And quite aggressively more recently. But look, I don't give up on these things. If you give up, you give in, you lose. You don't lose until you sell. All right, so it's what happens to Bitcoin and Ethereum will dictate what happens to this meme coin. All right, and many other meme coins are getting smashed right now. And not just meme coins, utility coins, your DEX coins, your gaming coins, your real world asset, whatever it may be, NFTs, they're all going in the gut at the moment. But it's about climbing back out when the conditions favour it. Monetary policy gets to where the Fed want it to sort of go accommodative to the economy, because at the moment the neutral rate is probably sitting below where the Fed funds rate is, and we want to need this Fed funds rate a bit lower to see a bit more easing and more unrestricted access to risk on assets like meme coins. I want to see them do well in an environment that it suits. Simple as that. It's that simple. It's in a restricted monetary environment where the balance sheet's been down and rates still are coming down, but very slowly. You might start ramping up things, ramping up the balance sheet, ramping up the rate cutting, and sort of get ahead of this thing. And the only problem you've got left is inflation. So not doing it too quickly to reignite inflation too soon. But I think inflation will come back. It's inevitable. It always comes back. And to kill inflation, you've got to raise rates again. So it's going to be another cycle of rates down and up. We'll see what happens. So if you enjoyed my analysis of Bitcoin, Ethereum and Ski, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below, and I'll catch you next one. Cheers.